In this video, I'm going to be taking a look at Humana stock and giving an analysis on it and why Humana stock is also positioned well in the long term due to some unusual factors that are going to be coming down the pipeline in the near future. So I'm going to break down the company financials, the macroeconomic environment, and then also finally wrap that all up with a prediction on Humana stock in this video. Now let's take a look at Humana's financials. Revenue is coming in at $106 billion per year, which is approximately 18% greater on a year over year basis. That's a good number. Net income is a little bit low at $2.5 billion per year. That's about a 2 to 3% net income margin. So a little bit light there, but positive to see that cash on hand is $21 billion, which is pretty healthy. PDE ratio is 16, which is also pretty favorable compared to a lot of tech names and even the stock market as a whole. And then dividend yield is producing, but it is much lower than some other dividend names at 1.1%. Now moving ahead to take a look at Humana versus the S&P 500. So as we can see here, over the past year, Humana has significantly underperformed the S&P 500 due to some troubles that have now been resolved, which actually puts Humana in a really good place, as I'll talk about with some key macro variables and then wrap it all up with a final analysis on Humana, that the company is well positioned for the upside after experiencing that downside recently. Now moving ahead to key macro variables. Money supply growth, which is a driver of inflation, is down 0.29% on a year over year basis. Core inflation is up 3.8% on a year over year basis. And this number is higher than desired, although negative money supply growth is good in the short term for keeping inflationary pressure down, as we can see with this graph here and that relationship between money supply and inflation. Next, continued unemployment claims, which measures rising unemployment levels, is up 32% from the economic cycle floor in June of 2022. This number is very high. At these levels, a recession has occurred within 1 year due to a weak economy that is prone to the impact of shocks. And right now, if you take a look at the geopolitical landscape, there are a lot of potential shocks out there. Moving ahead, currently we are at year 2 of the market discount cycle. So every 3 to 4 years, the stock market performs poorly due to an alignment of monetary and fiscal policy with the political cycle to address economic issues. Even though a recession is possible, as I talked about, the discount cycle dictates that it is unlikely that restrictive monetary policy and fiscal policy will be allowed, which would negatively impact the stock market. Now, before I dive into how this will affect Humana, let's look at the big picture. The stock market currently can be categorized as being in a good year because we are in year 2 of the market discount cycle. Now, it's important to understand the market discount cycle for this reason. If you were to follow the strategy on the previous table, which involves categorizing and investing around the predicted direction of the stock market, you would be $1 million better off in this 15-year example of a growth of $100,000. But also, it's important to note the major cycles as well. So, what is this? Major world changing domestic and international conflicts follow a cycle that begins approximately every 84 and 248 years. The theory around that is astrological alignments cause predictable patterns of human behavior in the same way that tides are impacted by the moon. Now, right now, if you look at this cycle graph, we are at year 83 and 248 on the major cycle, which means we are at about the phase where we are entering into that major conflict period. Now, it's important to know about the major cycles because they can bring about wildcard events in a very near future when coinciding with the market discount cycle that can negatively impact the stock market. Next, let's take a look at market valuation. So currently the stock market is overvalued, which means that it's poised for a bigger than normal drop during the market discount cycle. At the moment, monetary policy is currently favorable to the stock market as interest rates should remain about the same or decrease should any shocks present themselves. And before I dive into how this is all going to impact Humana, fiscal policy is also favorable as we continue to have strong government spending and would increase government spending should any shocks occur, especially due to the position in the political cycle. Before I give my prediction on Humana stock, make sure to go ahead, click the button below to get my stock rankings so you can find the very best opportunities. Now, here's the deal with Humana stock. The macroeconomic environment right now is favorable for stocks in general. And in the short term, with how much downside Humana's had, there's some good potential, although more volatile and probably underperforming at the moment to the S&P 500 and some other preferential growth names. But however, due to the major cycle coming in and also the market discount cycle down the pipeline, Humana is definitely well positioned, especially with a very comfortable and competitive PDE ratio and cash on hand to take advantage of some of those challenges that will be coming down the pipeline. So in the long term, it's a very good play. But in the short term, there's going to be some more volatility and also some more downside risk compared to the opportunity cost of going after something like the S&P 500 and the SPY or some other very intriguing growth names. That's all for this video. Make sure to subscribe to the channel so you don't miss any new daily videos or stock rankings, and I'll see you guys on the next video.